The best way to think of a cryptocurrency is that it's a digital currency using encryption to control the creation of units and verify any transfers. Currently, there are hundreds of cryptocurrencies on the market. The most popular of these is Bitcoin, which I'm sure you've heard of. But it's harder to buy cryptos, like Bitcoin, than you think. You can't just jump into your brokerage account and purchase your favorite token. In order to start trading cryptocurrency, it's important to know how to use the different exchanges. In a moment, we'll look at different trading platforms as well as the basic steps to opening up an account to trade various types of cryptocurrencies. But first, a disclaimer. Agora Financial Australia does not promote or back any particular exchange. This is simply a guide to help you better understand the steps involved in buying cryptocurrencies. Make sure you do your research before selecting an exchange. Now let's get to it. The first thing you need to do is figure out how to turn your Aussie dollars into cryptocurrency. You can't, as of now, use your share broking account to buy cryptos. You'll need to set up a separate crypto account. To do this, you'll need access to what's called an exchange. There are a lot of options all over the world to pick from. The usual first step is to buy Bitcoin. This is the most widely held and used crypto. You can hold Bitcoin directly or use it to buy the other tokens available on different exchanges. You can almost always buy Bitcoin and the second most well-known cryptocurrency, Ethereum, on each exchange, but access to tokens beyond these can vary widely between services. You'll also need to understand how and where your crypto is stored and how you plan to deal with the issues surrounding this. The most secure method is to store your crypto offline in what's called cold storage. Once you've bought Bitcoin or Ethereum, you may want to create an account with another exchange. This includes the likes of CoinSpot, CoinJar, Binance, and Bittrex. These open the door for you to buy hundreds of different cryptocurrencies. A lot of these second-level exchanges do not accept cash. You can only make transactions by using other cryptos like Bitcoin, Ethereum, Ripple, and so on. When you register with these exchanges, you'll have to provide some personal information, much like opening a bank account. You'll have to show a picture of your ID, you might have to make a video of yourself, and you're going to have to give your name, address, phone number, etc. They don't do it to be annoying or to try and steal your money. They do it because they're required to by law. Be patient. Once your account is verified, you will be able to get going. We always recommend doing a test transaction. Do not commit thousands of dollars without making sure you understand the risks around transferring crypto. So, where do you buy and sell your cryptocurrency? There are multiple big exchanges to choose from. Here are the most popular and highly rated. Remember, we do not endorse any of these cryptocurrency platforms, nor do we receive a commission for recommending them. I'm simply doing this to show you what's available. Last point on cryptos. What are the risks? When it comes to Bitcoin, do your own thing. If you want some Bitcoin in your portfolio as part of a diversified bundle of assets, that's up to you. If you want to speculate in some of the other lesser known cryptocurrencies, that's fine too. You might make a lot of money. My only advice is buyer beware. Take the time to understand how it works and what the risks are. First, not much is known about this relatively new asset class. We've seen before how the value of some cryptocurrencies can swing wildly up and down in the space of weeks or even days. That means you can potentially make a lot of money quickly, but you can lose it too. If you're not comfortable investing in volatile assets, cryptos probably won't be for you. Second, and perhaps more importantly, some believe that cryptocurrencies are beyond the reach of governments, cannot be traced, cannot be frozen or seized. This may be true now, but I'm not so sure it will be in the longer term. Let me explain. The technology behind cryptocurrencies is usually called the blockchain. Governments want to control it. They currently enjoy tight control over the financial system and they're not about to surrender that monopoly to cryptocurrencies like Bitcoin. But governments know that they can't stop the blockchain. Things have gone too far for that, so they will do the next best thing. Control it using powers of regulation, taxation, investigation, and so on. So, if you're buying into cryptos as a way of getting your money off grid, just be aware that it may soon be subject to government oversight and regulation, just like all other financial assets. Thanks for watching this video. My name's Callum Newman. Please check out our other videos in this series.